Good day traders, this is Stefanos on behalf of Tixee, and in today's video we'll be giving a look back of the market for the week of the 18th until the 22nd of July. Now before we dive into the webinar, the highlight of the week and what's probably going to be the highlight for the next couple of weeks is going to be the kickoff of the earnings season. We had a couple of stocks reporting figures over the course of the past week, but we'll be looking specifically at Tesla and Goldman Sachs, who both reported their figures this past week as well. Now, just to get into the disclaimer, as always, please know that all of the ideas discussed in the webinar are my own opinions and do not make up for any form of investment, trading advice, neither any recommendations to buy or sell. You should always do your own research and due diligence before buying or selling any securities, financial products, or instruments, and whether you use any kind of trading strategies. Any information that relates to past performance is not indicative of future results. So we'll be kicking things off with stocks. Like we said, over the course of this past week, we actually had quite a large number of stocks. If you were tuned in for last week's outlook, you would have noticed that we mentioned we had more than 1,000 companies reporting their numbers for this week. Obviously, it's a huge number to keep track of all of the stocks, but obviously we can keep track of a handful of ones, some that are expected to have the most volatility, for example. Some of them, then the ones we're going to be looking today, it's going to be Tesla and Goldman Sachs. So I'll pull the chart of Tesla in the meantime. Again, it's up to you which kind of website or reporting website you want to use with regards to the actual outcome, but pretty much from any economic calendar you can use, you will be able to find the actual outcome of the report. So looking at Tesla, they reported their figures on Wednesday, the 20th of July. By the way, I'm going to switch this onto the daily for the time being. So yeah, they reported the figures on Wednesday, the 20th of July after the market close. Now, as always, it's important to take note of the time that the company reported its figures, as this is going to tell us when we can expect the impact of the report. Now, you don't have to be in front of the screens at the exact minute they're releasing the figures. What I mean by the time is just whether it's going to be released before the market open of a given day or after the market close. Now, like we said, Tesla reported on the 20th and it was after the market close. So since they reported during the after hours, this meant that the impact was seen on the next day, on Thursday, with the open. And we can pretty much see the gap up and the difference that the earnings report made here. Now, Tesla beat both the revenue and EPS estimates. The revenue was beat by 2.3%. And the EPS estimate was beat by more than 25%. So this meant that on the very next day after the earnings report was released, the stock gapped up by more than 2%, and it actually finished the day almost up by 10%. You can pretty much see it only pulled back a little bit off the highs, but not by as much, and it was pretty much it closed in the green. And yeah, like we said, it barely made any pullbacks throughout the day, and it was up by almost 10%. Now, if I switch this onto the weekly time frame, we're going to pretty much see that that move was more or less the move of the week with regards to this stock, because essentially with the earnings report, that's when we made this whole move. And as you can see, we're pretty much at the very highs at the time of recording this webinar. Of course, there's still a couple of hours left until the market, the US market closes as well. So it could retrace a little bit, but whatever the case, maybe the point is to show the kind of impact that the earnings report can have when it is actually released. Now, we're going to move on to Goldman Sachs, which should drive the point home even more. So Goldman Sachs, it didn't report on the same day as Tesla. They actually reported the figures at the start of the week on Monday, but it was before the market opens. It was in the pre-market hours. So the impact was actually seen on the very same day on Monday. Now, just like Tesla, they beat both the estimates. However, they beat the estimates by more than 16% and more than 9% respectively. Now, Goldman Sachs finished the day up by more than 4%. But if we look over the course of the whole week, which is an even more impressive move, because it's up by more than 15% overall by Thursday's close and at the time of recording this webinar. So we can see with the open on Monday here, yeah, some people will say we closed in the red, but it's still a gap up from the previous close, so we're still in the green technically. And then throughout the rest of the days, we can see that we surged and made back all of the losses on the very next day after the report, and then we just carried on moving higher for the rest of the week. If I switch on the weekly, you're gonna be able to see this even better. So from last week, we gap up higher again. We retrace a little bit, probably just to fill in the gap here. And from that point forward, we're just pretty much moving higher and higher. And like we said, being up by more than 15% at the time of recording the webinar. So again, we can pretty much see the impact of the earnings reports and what kind of impact they can have on the stock price themselves. Obviously, we're going to be having even more stocks reporting their numbers next week, but we'll be covering those kind of stocks in the outlook, so definitely stay tuned for that one as well. Now, moving on to Forex, and what was the most notable pair of the week was the all-important and probably one of the favorite for most traders in terms of the currency pairs, which is the euro dollar. Now, last week we had the interest rate decision from the ECB. It took place on Thursday and was expected to hike rates by 25 basis points. Well, they ended up hiking the rates by 50 basis points in what was a pretty big surprise given the overall conservative approach by the ECB so far. Now this, so if I switch on to, we're actually in the weekly time frame, it saw the euro dollar being on track for the first week in the green after 3 weeks. As you can see, we've been declining and being in the red for the past 3 consecutive weeks. So it was more or less like a breath of fresh air for the euro dollar bulls, given the kind of downward movement we've been having, not just over the course of the past 3 weeks, but if I zoom out and look over the course of the year itself, we can see we're pretty much opening at these levels right here, so 1.14, and we're all the way down to parity as we speak right now. So it's down by more than 10% year to date, and obviously if we want to put some moving averages as well, if you want to use the crossovers for example as indication, so I'll put the 15, we can pretty much see we're well below that in bearish territory. So again, yeah, it was like a nice breath of fresh air for the euro dollar bulls, but obviously next week we're also going to be having the interest rate decision from the US again as well. So it's definitely something that's going to be bringing in added volatility, not just for this currency pair, but in general for the other majors as well. And lastly, we'll be looking at oil and gold. So looking at oil first, and again keeping it on the weekly time frame, we can pretty much see now at the time of recording the webinar, prices are more or less flat over the course of the week. Now oil prices, they're stuck in this kind of environment where it's bullish and bearish headlines week after week after week. So the bullish headlines, of course, are the ones that we have the supplying the tight supplies issues, given the ongoing war we have between Ukraine and Russia that's been going pretty much since March. So obviously this is something that's driving oil prices higher. And then the bearish headlines, obviously you have the recession fears, as well as any of the knee-jerk movements caused by the interest rate announcements from the Fed. And as we mentioned, we're going to be having one next week. So definitely oil and gold are going to be the commodities that's going to be worth looking at as well, given the announcement next week. And obviously with the result, just like the euro, dollar, or any other major pairs, are going to be getting added volatility since they're pegged to the dollar as well. So yeah, looking at oil, as we can see, like we said, it's flat over the course of the week. We're still trading above the 50 period moving average, but you can see we're pretty much coming pretty close to it as we kept retracing since reaching the 120 mark. So definitely going to be an interesting next couple of weeks to see whether we're going to be breaking lower and into new lows potentially, or whether they're going to be retesting the high here. And looking at gold, it's more or less a similar story. But the case with gold is that it's obviously already broken below its 50 period moving average. We might be getting a slight retracement now, but again, obviously with the announcement next week, that's probably what's going to be a major driving force with regards to prices, not just for gold, but for oil as well. And yeah, there you have it. This is as far as the look back and review for this week. I hope you enjoyed the video and you found it useful, and I'll catch you all in the next one. Until then, trade safe.